Mentioned that the three of us are here. These are actually my two middle sons. I have an older and younger one as well. But no, four.
No, get your four boys.
Oh, well, there you go. In a way, yes, definitely, Rich. We're with Stewardship Properties, and it's actually called Stewardship Investments in the Kansas City area. But if you ever want to look us up on our website, feel free to do that. I'm going to talk to you about something that you might have read about. Do you have your one-page schedule there? On the back side is a little description of ideal investments. How many were here before to hear the talk on IDEAL? Okay, great. So I'm here to convince you that this is actually a very good idea, that buy and hold real estate is the ideal investment. Now, I understand there are flippers here, there are lenders here, and so forth. I just have a little bit of a bias, and I want to convince you that that bias has some merit to it. So, ideal. I is income, that it has monthly cash flow. And then D is depreciation. There's great tax benefits with holding real estate. The frustration about flipping real estate is that you always have to account to Uncle Sam every time you do the flip, right? Every year it comes around. And you have to pay tax, that ordinary income tax. If you could get your property one day over 1 year, all of a sudden you pay, and you sell it, then you pay capital gains tax, which is less than tax on ordinary income. So Uncle Sam wants you to hold property. That's just what he's about. Besides that, oh, I'm going a little fast here. There's equity buildup. So every month, you see the principal go up, and the interest rate go down. So you're actually gaining over time a lot of equity in your property. Appreciation. No sure bet, as we've seen in the last few years, but in the last 100 years, appreciation basically followed inflation. Inflation's been approximately 3 to 4% every year. So obviously some years are better than others, but the potential there is for property to appreciate. And finally, leverage. You know what it is to be on a teeter-totter, right? If you have the long side on the teeter-totter, you've got a lot of leverage here. And real estate, because you use a little of your own money and a lot of somebody else's money, either the bank or a private lender, you've got tremendous leverage. So when I first encountered real estate was in the 70s in Southern California. I was a young seminary student there, and I was dirt poor. We were living in a $125 furnished apartment in Southern California, if you can imagine, Pasadena. And but the thing that amazed me as I left there in 1980 was that if I would have bought a property, a house for $60,000, $70,000, something like that, it would have been worth 120, 130 when I left. It was just one of those real estate cycles, the late 70s in Southern California, that was booming. And I was filled with, darn it, should have done that. I was kind of regretful. So I got to Portland, and even though I wasn't involved as a real estate investor, I thought I've got some part-time energy on my hands. So over time, I decided I would start purchasing property. Well, the other thing that got to me as I started thinking about it, I was reading books and so forth, I saw an amortization table. And what fascinated me about amortization was that I could see, and by the way, in those days, you couldn't just pull up a computer and look at an amortization table. There's a teletype machine that sat there on a desk and spit out an amortization table, and it was quite something. Some of you remember that, right? Yeah. So I saw that printout, dot matrix, by the way, and I said, wow, look at that. Every month, you know, what I owe on the property goes down. That's pretty cool. So it was equity buildup that really got me motivated. Well, so what got you interested in real estate? What was it about these three, the ideal things? Do you remember? What was the first thing?
Income.
The income? Okay, monthly incomes?
Leverage.
Leverage, you like the leverage thing, okay? Somebody else?
Cash flow.
Okay. Appreciation. Lots of things to like about real estate investment. That's why we're all here. So, started out. How many of you started your real estate investment career in, say, 2005, 2006, 2007? Anybody here? Okay. Yeah. Great timing, guys.
Yeah.
You were really riding it up, right?
Yeah.
For a moment. I also started my investment career at the same time, only it was called 1980. Okay, I was in Oregon by this time, Portland. And the recession in the country, you remember? Oh, some of you remember, come on. Some of you don't remember this, all right?
15% interest.
Yeah, in the late 70s it did 15% interest. It was crazy, right? So the whole country went into recession. Oregon went into a depression because the housing industry was predicated on the timber industry, which pretty much was the only industry in Oregon at the time. Since then we've got some other things going on, all right? Nike moved in, some other people moved in. But at that point, there was 25% of Oregon's economy was on timber. So the economy, particularly the housing market, went into free fall. That's just when I started my career in real estate investment, all right? Matter of fact, I bought at the top of the market. So, it was awful timing. But if timing was the only thing that was against me, I probably would have done all right. But no, I had really no plan. I just knew this was a good thing. So I ended up buying 4 houses during about a 6-year period. And of course I lost money on all of them, but I had no strategy, except one of them. I had no construction skills. I just had enthusiasm. I remember one time when I finished a house and I was doing the countertop. And how many people have tried to do a kitchen remodel themselves, having never done one before? Okay, well, you're just as crazy as I was. All right? so I was laying down the laminate top, all right, which I did, and I came back a couple minutes later, and there's this gigantic bubble in the back of that laminate top. I said, oh my gosh, what am I going to do? I ran out to a store thinking I could find a syringe, and I did. I found a big old syringe. I came back, I put glue in that syringe, and I pumped it underneath the laminate top. Then I went outside and I found some bricks, and I put it on top of that countertop. You know that thing sunk down? It held. It just held. I was so thankful. I didn't know how to peel one off after you started putting it on, all right? Finally, when I was trying to sell this house, because I had to, the economy was continuing to go down every month there, I put it on the market, and some people went through it, and they seemed to like the house. And as they looked, they came back up to me. They said, we really like it, but could you tell us what happened to the texture? And I said, God, I shouldn't have hired that guy. That was really a bad idea. It was awful. Okay? So, property management also wasn't my strong suit. A couple of these houses I tried to rent out. I didn't realize you should do rental agreements on paper at the time. So we had a real good handshake at the front end. You know how those things go, right? That was ridiculous. I just had a disaster. I had so much enthusiasm. I love those amortization tables, but I had no plan, no construction skills, no property management common sense. You would have thought I didn't know anything about business. You know what? I didn't take a single business class in college. Should have done that. I was an entrepreneur by nature, but I wasn't very business-minded. So what could I do? Well, I could quote Winston Churchill. Success is never final. Failure is never fatal. It's the courage to continue that counts. At that point, no courage. I just left Portland and went to Eugene, all right? But I knew in the back of my mind, real estate was where it's at. I just didn't know how to figure it out. Now, I'm going to tell a little story that is going to relate later on. During this period of time, I bought a 1981 Toyota pickup truck. Now, when you buy a used car or vehicle or whatever, what do you do to get ready to figure out what the value of that vehicle is? You search the market, in those days you look at the classifieds, I decided that one make was between 1979 and 1981. They made the same kind of Toyota pickup truck. And I searched the market, I knew exactly what they cost, and I wanted to buy one. Now my parents had given me, they had lived in Wichita at the time. They had one of our friends drive out because they didn't want it anymore, a 1976 Ford Granada. Oh man, this thing was Battle Car Galactica. It was amazing. They left it in our driveway. And I said, you know what I want to do? I want to trade that for a 1979 to 1981 Toyota pickup truck. So I knew the Toyota pickup truck thoroughly. That's a niche market, right? Finding that niche, those particular trucks. I found a guy in Corvallis, which is down the way from Portland, and he had a 1981 Toyota pickup truck. And he wanted to sell it because he was trying to get a loan on his house. So he actually traded me the Ford Granada for that pickup truck. And I got a heck of a deal. But this is going to come back. I want to talk about why this is important to think like this. We got to get to know a niche market and get to know it very well. So here I am in Eugene, and starting out, I'm a 36-year-old campus pastor at this point, and I am realizing that my time in campus ministry is coming to an end. About that time, I was flat on my back because I had hepatitis from a restaurant. And if you've ever had that before, you just can't hardly get out of bed. I was just going from my bed to the bathroom and back again. So I had 2 weeks of just thinking. And I was thinking, what do I want to do with my life? And I went back over my real estate experience and I said, is there a way I could do that better? Oh, there's got to be a way I can do that better. So with this time on my hands, I was reading a couple books, one in particular on property management. And the basic theme of the book was you can't treat real estate investment like a hobby. Boy, the light went on for me. That's exactly what I was doing. I was treating it like it was an informal kind of, relating to tenants as friends, as pals, as buddies, and being very unbusiness-minded about things. So what did that mean for me? Well, it meant the book said, get some business cards. So I got some business cards. Get a name. I got a name. It said, don't make agreements with tenants in your home. Don't bring them to your home. Meet them at your office. I had no office. So Wendy's became my office. And I'd meet them at Wendy's and, just saying, hey, I'm out for the day from my real brick and mortar office, so why don't we just meet at Wendy's, And they were none the wiser about that. But I met at a location that was not my house. So again, trying to be business-minded, I did everything I could to change my perspective from a hobby, even though I didn't have any real estate, or I had one house at one point in Eugene, to a business enterprise. Got a loan from my dad, which was really helpful, and I bought and rehabbed my first property. It was by the University of Oregon. And I just fell into this campus rental market, which happened to end up being quite lucrative. But from day one, I don't know where you're at in your real estate investment career. Maybe you've bought a few properties, maybe you're just thinking about it. But what would it mean for you to treat this as a business enterprise? Think about it. What would that mean? Give me some feedback here. What does it mean to treat your real estate investment career as a business enterprise?
Have literally a book of policies and procedures that you yourself have to follow.
There you go. You just don't make it up as you go along, right?
Have it written and you yourself follow it.
Now, some of us are more organized than others and are thinking that way, but that is really helpful, yeah. Okay. Incorporate, okay. Actually become a business, an LLC is a good idea. Sure, okay. Some other things.
Separate checking account.
Separate checking account, all right? Great idea. Some others? Got some? Help me here, help me.
Don't make any of it sentimental.
So what?
Don't be sentimental about any of it.
Okay, all right. You don't have to be nasty or cold, you just have to say, these are the policies, these are the regulations, this is how I have to operate. Yeah.
I was just going to say, I mean, one of the first things you learn in business school is to write a business plan before you start any business at all.
Okay.
And, you know, how are you going to market it? What's your strategy?
Write it down, that's kind of the key thing there. Have all you guys got some written goals and strategies and objectives and when those are going to be met? Boy, that's the first thing they teach you. Write it down. If it's not written down, you know, it's just kind of in the ethernet, isn't it? That's an old term, by the way, for, yeah. Start with a business plan. So, and write the business plan down. Other things that separate an informal thing from a business enterprise?
Dedicating time.
Okay, all right, definitely.
What was that?
Dedicating time. So if you're serious about real estate investment, you might forego some vacation time, right? You might say, I'm going to put it in my schedule. So my desire is all of a sudden going to show up on my calendar because I'm really committed to this. Okay? So we were talking about a business enterprise, and of course a business enterprise is all about profit, right? Or is it? Now, I view profit this way. Profit is to a business like blood and air is to the body. If you don't have it circulating, if you don't have it going in and out, you don't have those things, you will die as a business, right? So profit is essential. However, do we live for the blood that flows through our veins and the air we breathe? I don't think so. So my feeling is that you have to have a larger vision for your business enterprise. It's just not, my mission is to have income, is to be profitable. It has to be bigger than that. If it's not bigger than that, how do you expect to draw people in to become loyal to you in your network and eventually your team, your employees, your contractors, other people? Is it all about you or is it about us? When I was thinking about the name of my own business, stewardship came to mind pretty quickly because I wanted to know for sure when I entered the door of my office, and I finally did get a real office after Wendy's. It was actually right across the street from Wendy's, so every time I come to my office, I see my original office. That's a good reminder, right? But stewardship told me that when I saw the name on the sign, I'm not really an owner here. I'm just a manager of the things that I've been entrusted with. And as a manager, I want to do everything I can to be responsible with those things. For not just myself, but for everybody around me. Because I'm stewards. And I want to be a good steward of those things. That helped lift my vision. I don't know what will help lift your vision of your business. But think about it in terms of more than profit. It should be fun. It should be exhilarating. It should be terrifying. It will be. It should be, it should be all of those things, but it should encompass a larger vision than just profit. So stewardship. Well, in my mind, this vision includes you and your family, includes your team, and you think of eventually an admin. You'll have a few people helping you do things in the office, whatever office that is. I'm not assuming you have a big office at first or anything, but you're eventually going to hire some people in the field as well. So you have two teams, really, your office team, your admin folks, and your field. You have a network, key real estate agents, lenders. You have people who maybe bird dog for you, people who are escrow officers that you can call and say, what about this issue? So you want to really gain a network of people around you. Sellers are really part of this. You want to make sure that it's a win-win situation when you're purchasing property. Now obviously, you have some goals and you have to meet those goals in terms of purchase price and so forth. Finally, residents. Those are people in your larger vision at all. And we try not to call these folks tenants because they're more than tenants to us. They're our residents, they're our customers. And customer service is incredibly important in any business, and our customers in the buy and hold real estate investment business are residents. So 15 years, 1989 when I started stewardship in Eugene, started buying campus properties, went from one to the next, and it just, I had the appreciation, the wind in my sails of appreciation, and so at that point it was fairly easy to buy properties. Surprisingly, you could buy properties and turn around and they could cash flow for you. If they were campus properties, that's the only market I really knew. Remember the blue truck, the blue Toyota truck? I got to know one market really, really well. So I knew what 1979 to 1981 Toyota trucks sold for. So anytime I saw that campus property within that location, I knew what it was worth. I didn't know about other areas. There were a whole bunch of areas in Eugene I had no idea, and Springfield's right next door. I had no idea what those values were. But when I saw a property around campus, I knew what I could do to it. Increase bedrooms, number of bathrooms. I knew what students would pay for it. I had a lock on that, and I just kept buying one after another after another. But 15 years into the process, I was on vacation with my wife, Teresa, and while on vacation, this was 2004, I was reading a book. I did not realize how this book would turn my life around. Jim Collins has written a number of great books. Built to Last was one of the first ones. He wrote Good to Great, Great by Choice. Has anybody read any of Jim Collins' books? That's good. They're all worth it. Start with Good to Great maybe, but I was reading Built to Last. And in Built to Last, you know, I was thinking, well, this will be a good read. It'll help me think through my business. Because I was at the 15-year mark and I said, you know, I just need to think of things. Some things are going well, but I want to see if I can, you know, move ahead. And he had this phrase in the business, in his book, that said, the great companies back from the 1800s, you look at, and of course some of them have had up and down cycles, but the truly great companies have had at the core of their vision to build an enduringly great company. What a great phrase, to build an enduringly great company. So he wasn't about build to flip, he was about building something of great substance over time. And I said, wow, what would that mean for me to transform from this little family business that I have? You know, I'm doing pretty okay. I've got campus rentals. You know, they're generating income. I have, about early 90s, I made real estate investment my sole occupation. And it was going on year after year, but I had no thought about what it would be to build an enduringly great company. And so that gave me quite a paradigm shift. I started evaluating the parts of my business, and parts of any really real estate buy and hold business. There's acquisition, there's rehab, there's management, and finally there's finance. I said, wow, you know, some of those are going better than others. Like the rehab's going all right, the management's going okay. I had a pretty good property management team going by that time. And you know what, even the finance isn't all that bad. I'll talk a little bit more about that later, but I'll tell you the acquisition is rough. I am the only person out there looking, and I'm also having to do everything else. At that point, the whole idea of partnering really wasn't part of my perspective. I said, what could I do to really grow this company and to draw in more people, more creative, more energetic, more folks that could really take me to a different level? Because there was just one and only me, even though I was overseeing crews, I was overseeing property management folks. So I decided, why not? Hey, I'm right next to a couple of universities. Oregon State's just up the freeway from here, and I'm right next door to the University of Oregon. Why don't I start an internship? My son Andrew was in business school at the time. This is 2005. And that summer, and the next summer, 16 OSU and U of O students went through 3 months with us each summer, and they learned every part of our business. So we put them out on the cruise 2 days a week. We split the groups in half. Half the group would call sellers, they'd do marketing, they'd go look at properties, and the other half would do things like construction, property management. They'd hang out, they'd do rental agreements with our folks and learn about how to do that. So we just did all kinds of fun things together. This is a group of those 2 years. And I was actually looking for the cream of the crop, the A players of those 16 over those 2 different summers, because I really wanted to bring on partners to help me grow the business. Well, you know, when you think about it, what's your team? Where are you at in your business? Even if you haven't bought a property yet, what's your first step in building a team? Because we all have to start somewhere. Who's that person you need first to leverage your time, energy, and resources? Can you think of that person? Or who's the person you need to hire next if you're farther along? What position is it? Because you don't want to wait till you need the person, you want to anticipate the person, right? And think about this. If you're out there hammering nails or putting down laminate tops, and worse than a minimum wage person doing that, like I was, wouldn't it be better if you found somebody else and leveraged your time and energy? Some of us are easy delegators. I would include myself in that. Some of you can hardly let it go, right? You have such a need for control here. You can't build an enduringly great company if you have a huge need for control. You gotta let it go. You've got to say, I think somebody else could do this. Somebody else could break up the leaves, for crying out loud. Somebody else could clean out the gutters. You know, somebody else could do these things. I just need to find a way to finance this thing so I can be freed up to do the things that I do best.
Did you pay those interns?
I did. Minimum wage, but it was $8 an hour in Oregon at the time. So we did. That's our office behind there, but it was a great couple of summers, you know. Can you imagine 16 business majors, they were all business majors, coming into your business with a few ideas? Whoa. Yeah, well, it was pretty crazy. As a matter of fact, here's some of the ideas. We had a billboard, all right? Well, not a lot of people were doing that at this point. That's kind of standard right now. But we also, who has a house truck? All right? Not a lot of people, right? Yeah, okay.
I still running that one.
What's that? We still have it. It's not running, sadly. But,
Is that a Toyota?
it should have been. It's a 1973 Jeep. It should have been a Toyota, though. Now, some of our guerrilla marketing was deceptively simple but effective. So I made more money on a 3-line ad. Now, granted, there's not a lot of stuff going on with classified ads anymore, but I had a 3-line ad running for years, 10, 12, 15 years. And it simply said this, and it went into the paper in our section. Now it'd have to go into Craigslist or something. Save the commission at the top. Looking for a home or investment property. Call Bill and my phone number. I got more incredible deals out of that one 3-line ad than I've done in any kind of marketing. I've made literally, I don't even want to comprehend how much. A lot of money. It's funny how little marketing things can help you, but what are you doing right now for marketing? Andrew will be talking a little bit about that. What would be really effective? So my first niche market was campus rental properties. And those interns became returns. Sadly, we formed 2 partnerships with 5 guys and myself. And that was in 2007, real good timing, wasn't it, okay? And the market started going down. But we were buying properties. I mean, we were buying a lot of properties. As a matter of fact, we had to become experts in short sales at that point because that's what a lot of the market was becoming. So we flipped nearly 200 houses between 2007 and 2010. We had 3 offices, Portland, Salem, and Eugene, and we were going nuts. We had a short sale office where we had 3 processors. All they were doing all day was calling banks, trying to negotiate short sales, and we were buying them and then flipping them to end users or end buyers kind of thing. So we were kind of the middle people as we bought the property and fixed it up and turned around and flipped it. But it was pretty crazy. The interesting thing was I got really bored over it. Now, I'm not dissing flipping at all because I know that's a good business and I've been there, done that, believe me. I've done a lot of it. But I wanted to go back to what I really was familiar for the first 15 years of my business, and that was buy and hold. And so I during this time, and by the way, this can get you when you get bored. I bought a trucking business during this time. I had 5 belly dumps. Right, you know what a belly dump is? Those things you pour gravel onto the, I knew nothing about trucking. I just thought this is a multiple stream of income, right? Why not? No, keep focused. That's what a niche, I forgot the blue Toyota, I forgot about it. You know, have that niche market. Get to know it really well, become an expert in that one thing, and then when you see it show up, you'll know exactly what the value is. I had no idea what this value of this business was, and it just dragged me down in terms of time and energy and resources. Took my eye off the ball. Don't get bored when you find a good niche. And campus rental properties was an incredible niche at that point. When you find your niche, go for it. Become the greatest expert in Kansas City in that niche market. That's where you'll make the money. So, in getting bored, I looked for another buy and hold market. And lo and behold, through a series of events, we ended up coming to Kansas City. Because that's the promised land right now for buy and hold. We're living literally in the best place in the country to do buy and hold real estate. If you can't do it here, you cannot do it anywhere else. Well, maybe Ithaca, New York is another place too, and there's Memphis, Tennessee. There's a few other places. Indianapolis is a good one. You know, you can eke it out in a lot of places, but Kansas City is unmatched in terms of a buy and hold market. And we'll talk about why a little bit later. You probably know why. Find your niche market. Campus rentals were my first niche. Short sales and foreclosures we became quite good at. I have a partner. We're buying multifamily in Dallas, and I've actually gained, and he and I, his name's Greg, we've gained some expertise in that. But now our main focus is buying single families to fourplexes in the Kansas City area. And let me tell you, it's a different landscape than buying campus rental properties in Eugene, Oregon. Matter of fact, we were all ready to transfer all our property management knowledge, which is considerable, right, from students who are usually, have parents who co-sign. You never get every dollar of rent because you have 6 students moving into a property, 6 parents are co-signing on the rental agreement, and they also pay a first security deposit and total last month's rent. So I just was ready to transfer that whole idea to Kansas City, when in some of the working class neighborhoods we were buying in. Oh, that didn't work out so well. But we'll talk about that later. The reason that you want to focus on one thing is because the riches truly are in the niches. Nice phrase, comes off the tongue easy, but so true. Become an expert. Remember the blue Toyota. So the buy and hold market. Well, here's the various 4 elements of real estate investment. On the right side, where you have acquisition, that's really a wholesaler, and that sounds like you're going to have a whole event on wholesaling. That's definitely a niche market. It takes real expertise and people who have great perseverance finding properties and knowing the market. I mean, I tip my hat off to wholesalers because I don't think I could do it. It's a tough market. Good place to start if you're just starting in real estate investment and you have no money. It's a great place to start because finding a great deal is the key to real estate investment. There's nothing better than that. Finding the great deal or making the great deal. They don't just fall into your lap. Oftentimes they're negotiating. It's negotiating the great deal that makes it happen. This is the cornerstone to great real estate investment. On the other side, with rehab, you have a flipper, because they have to know acquisition and they also have to know rehab too, right? They have to get skilled at rehab, and that is truly something to gain expertise in. You're not. There's a lot of horror stories about rehab. We'll talk about some of them actually. But on the left side, you have management and finance, and that's when you're doing buy and hold real estate investment. You have to have the entire circle working for you, not just one side of it. So, how do we do it for time? I want to kind of end here with a wealthy mindset plus an ideal strategy, what that equals. So what's our mindset to be? Let's start with, I made the W-E-A-L-T-H, wise living. So I don't know where you're at in your real estate career, but I do know that you probably have a credit card, right? How many people have a credit card? Okay. How many people, leave your hands up, how many people use your credit card once a month? Okay, I do. How many people pay off their entire balance every month? Okay. Now for those people who haven't raised their hand and don't pay off their balance every month, the good news is you already know what a hard money lender is. Because the average interest on a credit card in the United States today is 15.07% interest. Okay? So you're acquainted with a hard money lender. Now what you want to do though is get off the credit when it comes to depreciating items. All right? This is part of wise living. If you're going to be a real estate investor, the first step is to get rid of bad debt. All right? So, what is bad debt? Well, we'll see if I'm going to talk about that or not. I have it in here. But what is bad debt? Maybe you can help me with that. Give me some items that you've purchased that have been bad debt. What's that?
A new car.
A new car.
A new car. Why is a new car a bad idea?
Driving off the lot.
Yeah. I bought a lot of vehicles. I cannot bring myself to buy a new car.
I love a new car.
That's another
I pay on time.
All right, there we go. All right, well, the new car smell is great.
You do.
But realize that when you're walking into that new car and that leather is smelling so good, you've just thrown away, what, 10% of the value of that car that you purchased? All right, so the new car doesn't feel quite as, sorry, I know what it's
I feel like it.
Yeah. Okay, what else is bad debt?
Big screen TV.
Yeah, could be, yeah.
I once heard that bad debt was anything that wasn't going to generate income for you.
There you go.
That's a good way to put it.
Okay. It certainly pulls down your resources, doesn't it? If you're giving your resources to this over here, certainly credit card payments at 15.07% is bad debt, So get rid of that stuff. I mean, really, the only way you're going to prepare yourself to be a great real estate investor is by thinking in terms of credit, cost of funds, because you want to lower your cost of funds every chance you get. So, start with that. Education, you guys already have that working for you because you're here. And it's an ongoing education. What I would encourage you not to do is just to get medals in education as a real estate investor. And I've been to guru seminars that people have, right down their chest here, all these, ribbons. Because they've been to this conference and this conference and this conference and this one and this one. And it's like they're proud about that. But I want to say, okay, what'd you do with that? And some of them have paid $30,000 and $40,000 and haven't bought a single property yet. So it's good to get educated, but educated for what? Educated for action. That's what we're going to see here. That's what you want to get educated for. Leverage. It's more than just other people's money, but it's other people's smarts. You know, have a mentor. Look around for somebody who's doing it well. You know, glom onto them. I'll tell you, even people around, I'm a busy guy, but if people come to my office and say, hey, I want to learn something from you, I take that as a compliment. I'm really open to do it. I bet if you walked in the door of a very successful real estate investor, they would probably do the same. And you know, nobody makes it on their own. I profit tremendously from hanging around mentors. Some of them have been in books. Let me mention a couple. Gary Keller has written a fine series of books. The Millionaire Real Estate Investor is a blue book, probably the best book on the market on real estate investment, particularly buy and hold. There's a second one in the series called Flip. And if you're doing any kind of rehab for, you know, to sell the house or have it as a rental, Flip is a great book. It's green. The third one in the series is not so good. It's called Hold. It's yellow. But I would buy some of Jeffrey Taylor's property management. He's Mr. Landlord, by the way. Very helpful property management information. But get a mentor, even if that mentor is from an author. Finally, be a team builder and help others. Again, we don't want to, you know, we don't want to approach this with a scarcity mindset that we have some information that we're not going to share. We're in this together as real estate investors, and we have an abundance mentality where the piece of the pie is, you know, it's not a finite kind of thing. So I appreciate when I'm in a real estate investment kind of club like this, that people are willing to really share and help me out, particularly if I'm new at this. And that's a great mindset to have. Now the strategy, I would say, is the ideal one. I really do want to make a case today that buy and hold real estate investment is the way to wealth. Don't make a profit, make a fortune. The greatest millionaires and billionaires of all time have been real estate investors who've made their money largely through real estate. You know McDonald's? Think they made their money through hamburgers? Big Macs, quarter pounders? No. They own a ton of real estate. Every piece of land that their golden arches is on, they own it. Those have become incredibly valuable over time. They're a real estate company. Nobody really realizes that. They made a fortune in real estate because they bought commercial property on great locations 20, 30, 40 years ago. What do you think that is worth now? So, buy and hold real estate. I just, you know, I'm going to make my case here. So, a wealthy mindset, an ideal strategy equals financial wealth. How about questions?
Oh, I'd say, you know, it's a good idea to make your real estate investment into a business, and then you say have your tenants as like customers. Like, what do you think is a good idea to have property where you've never even met the tenants and they don't even know you own the property to make it that much extreme?
Yeah, I think that's not a bad idea. When you know, Philip's going to talk about property management a little bit, but I think having a little bit of distance is a good idea. That I'm the property manager, and if people ask me directly, do you own the property? I say yes, but I don't ever, just, let them know that up front. I'd rather have that separation. Yeah.
What I say when people say, and I say the same thing as Andrew does and Philip, I'm simply the property manager, and then sometimes potential tenants will say, do you own it? And I'll say, well, it's a family-owned business, and I do the management, and that's my contribution.
Sounds
And
great.
so that way, if they don't pay the rent, I'll say, look, this is my family that's holding me accountable.
Wow. That's powerful.
Well, it is, yeah.
Yeah.
like, so one of them got it. I have a problem I need taking care of. However, one got the tenant. 3 of them haven't got them this month. So I telling the property manager, go there, get the money. We have not done that.
Okay, well, we'll talk about property management in a minute, but everybody here needs to watch a movie, all right, about property management called Pacific Heights.
The what?
Pacific Heights.
I saw it.
Who is the guy who was the first Batman? Who played it? Michael Keaton. Michael Keaton. He is a mean kind of dude in Pacific Heights. He's much meaner than any other role because he's a guy that's figured out how to screw a landlord, all right? It's an awesome movie that will discourage you from buy and hold real estate. Other questions?
Can you think of any ways, any idea, things that pop out to you of how your interns affected your business?
It gave us a lot of energy, you know, obviously. And I think as you get older, that is something, you know, I just kind of, so getting around younger people is really helpful, I think. And a lot of creative thinking went into that. You know, it's fun being a mentor. You know, I really enjoyed myself, and we had camera crews out from Eugene. This is kind of unusual, and they filmed us a couple of times. That was kind of cool. So it was just, you know, something, you know, out of the box a little bit, and I was just glad to do it. Andrew was really important to that process. He was, you know, he helped recruit those folks from business school at Oregon, University of Oregon, and we have some lifelong friends as a result of that. And some of those guys are doing very well today in real estate investment. One guy's in upper state New York. What do you know? He settled around, which university is it? Marist College, is it? And he's buying campus rental properties and doing great. As a matter of fact, he doesn't have a job anymore, and I don't know, he's in his early 30s now, because his campus real estate properties have generated enough cash flow to free him up. That's pretty cool. A couple of guys are in Salem, and they're flipping properties, and now they've transitioned to not just flipping. They flip one or two, and then they hold one. They flip one or two, and then they hold one. Really cool to see that transition going on, because they've become great flippers. As a matter of fact, I heard through the grapevine that John, who's the lead guy there, they're going to get their first $100,000 profit on a flip. Wow, what a milestone. And that's pretty cool. I mean, that's really gratifying to hear that. John was, by the way, one of the most awkward ducks we had ever met, truly. But he, in his first deal in Salem, we were in partnership at that point. He made a 4,000% return. He bought a property for $7,750, and we sold it within 3 months for $42,250. And John had the audacity to offer $7,750 on that property. I couldn't have done it. He did it, and he does it every day. And a lot of people say, "You got to be kidding me." No, I'm not kidding you. No. That's what it says here on the paper right here. see, it's right here. Oh yeah, that's what it says. Okay, all right, I'll sign for that. I just don't know how he does
How
it.
did he find that kind of a deal?
Well, this property was owned by a painter for 30 years, and he had stored all kinds of painting equipment and everything, and his widow then was selling it, and it looked like a total biohazard environment. And it's possible we need to tear this property down and just, it's lot value. So he considered it lot value. Well, all we did, we put it on the market. We actually were wholesaling. We just wholesaled that property. We found some investors in Portland who saw it a lot more in lot value. They bought it. They brought a number of dumpsters out, probably the dead of night. I don't know when they did it, but they took all that stuff out. They put it, you know, you wouldn't want DEQ showing up, I don't think, when they did this. As a matter of fact, we didn't even want to be in the chain of title because of that. So we flipped the property, And unfortunately, the seller had to find out how much we were flipping it for because we just flipped the contract. But they didn't bat an eye. They knew they had sold it for $7,000. We were selling for $42,000 and hadn't done a thing to it. But that was John's first deal. And he's done others just like it. Part of it is, and Andrew's going to say this, I'll steal a little thunder, if you're not embarrassed by your offer, it's too high. Right? Other questions?
I got one. You were talking about building a team,
Mm-hmm.
and obviously you partnered up with a lot of people. For someone new beginning, how do you see partnerships?
Boy, it depends on if you have money or if you don't have money, to some extent. If you don't have money, I see you, the kind of partner you need to be is the bird dog, the person who knows that blue Toyota truck and what it's worth, and you're going to look in a niche market and you're going to find a great deal. Because if you have a great deal, you can come to all kinds of people who will want to be your partner. I want to be your partner, for crying out loud, all right? So if you don't have money and you're first starting out, that's the side you need to focus on, the acquisition side, and eventually the rehab side. But, you know, even if you're uncomfortable with making offers, think of John. It's on the paper, you know, I don't know, you know, this is the value of this house, right? But if you have money, then you might want to find a young buck who is into acquisition. And they're out there. They're all over the place, but they don't have the means. And you come along as the financial partner and you meld your resources together. Okay.
Take a 5-minute break.
Okay.
I guess, after the next one.
Good deal. One more question and then we'll do that.
Usually I exclude the realtor. If I offer low, they don't like it. They don't.
Okay, one more thing, and I think that this will be talked about again. It's a critical thing to find an investment-minded realtor. Okay? Now, I've been through a lot of realtors in my day. Some of them are great at new home buyers. Some of them are great at move-up buyers. Some of them are great at upper-end buyers. You don't want any of those folks. They're good at what they do. Don't waste their time because you want an investment-minded broker. Investment-minded broker knows that you're going to make a lot of low offers, but they also know that you're going to be repeat business, and that when you do have that offer that you like, you're going to follow through. You're going to make that deal happen, and you're going to buy that property. So they're comfortable with you because they realize what you're doing. You're buying wholesale. You're not buying retail like a number of brokers are selling. You're not going to go out to 7-Eleven and buy your milk. You're going to Costco. You got Costco's here?
Yeah.
Yeah, all right. So, or you know, you're buying wholesale. That's all you do. Some brokers don't understand that. A few get it. All right. That's fine. The people that don't understand it, but you don't waste their time because they're going to be really disappointed or trying to raise your offer all the time. If the broker's trying to raise your offer, that's probably not your person. I've had a key investment-minded real estate agent in Eugene for years. Very helpful. In Salem, we had one for years. And now in Kansas City, we also have one that we pretty much couldn't live without. And he's never trying to jack us up because we've given him a huge amount of business over time. He realizes what he's losing in that deal that we're turning away, he's making up in volume over time. And he knows what we're after. It's key to find investment-minded brokers to help you. Okay, let's take a break.